Hey everyone, this is a video for 5-13A. I'm doing the A problem for this video because you guys are doing the B problem for homework. So I want to make sure you guys are fully prepared. This is not something we typically do an assignment on during this class. So with the rearrangement of the class for this quarter, we've decided to include this. Basically, you're going to go over the 3 different types of accounting methods. In this class, we use the accrual basis, which means you record it when it happens, no matter what it is. The cash basis is pretty much when you receive cash for something, then you record it. So the cash basis, basically, if you receive money from a revenue or you pay an expense, that's about the only time you record the transaction. In modified cash basis, if it concerns receiving cash when you do revenue, when you do expenses, when you pay for your expenses, if it has something to do with accounts receivable, no. If it's accounts payable or services, no. But when you purchase assets, then you record it. Prepaid assets, you record it. Long-term assets, you record it. So basically, pages 149, 150, and 151 are going to be your best friends for this assignment. Figure 523 gives you a great example of when you record. And this is basically what our assignment is going to look like. So if we purchase supplies on account, you would say what we would use. For cash basis, since it's on account, there is no entry. Modified cash basis. So if we go back up, let's actually go down here, it shows you purchase of assets on account. So that's essentially what we did. We purchased supplies, which is an asset on account. So there's going to be no entry for the cash basis. Modified cash, we're going to do assets and accounts payable. Accrual is going to be assets and accounts payable. So this gives you basically, you may have where it shows up how it does. You may need to highlight it and click on wrap text, and that's going to help make sure you get everything in. And so those two are going to be the same. Make a payment on an asset previously purchased. So we can look over here, and it doesn't give us the information we need. It doesn't tell us how we're going to record it. Aha, it does. I wasn't reading far enough. Payments for assets purchased on account. So since we're going to be using cash, we're going to have expense in cash for the cash basis. Again, you're going to have to click on wrap text. For modified cash basis, it's going to be accounts payable in cash, and then accrual is accounts payable in cash. So these two are going to be the same. Purchased supplies for cash. So, shows if we're purchasing expenses, pay cash for prepaid items, purchased assets on account, we didn't. So this, because we're purchasing supplies, it's going to be assets, cash. button. There we go. And it's actually going to be the same for all three. Purchased insurance for cash. So here, pay cash for prepaid items. So it's going to be expense in cash for the cash basis. For the modified and accrual basis, it's going to be prepaid asset and cash. Okay, the fifth one we have to do is we pay cash for wages. So let's look over here and see. Prepaid items, wages earned but not paid. Nope, we're paying them. So it's going to be cash and expense for the cash basis. If you look up here under pay cash for operating expenses, wages, advertising, rent, phone, etc. It's going to be expense in cash. It's going to be expense in cash and then expense in cash. So this is going to be the same for all three. Paid cash for phone expense, again, it's going to be the same as above. For all three. Paid cash for new equipment. Paid cash for property, plant, and equipment. So that is what would be considered new equipment. So it's going to be an expense in cash. Again, here it's going to be property, plant, and equipment asset. That's going to give us an idea of what type of asset we purchased. And then it's going to be the same for the cash. I'm sorry, for the accrual basis. Wages paid, earned but not paid. So we already saw this one. Wages earned by employees but not paid. So cash and the modified cash is going to have no entry. Here we're going to have wages payable and wages expense. Just like when we would have when we are adjusting an entry at the end of the period. Okay, prepaid item purchased but partially used. So this is when it's going to get a little trickier. So prepaid item purchased. So here's we purchased it, but it doesn't show how much we have used. And so prepaid items used. It's going to be no entry, expense and then prepaid asset, and then expense and prepaid asset. If I can type. And then let's copy this over. And the last one, depreciation on long-term assets. So basically the long-term assets would be vehicles, vans, copy machines, printers, buildings, that type of item is considered a long-term asset. So since we're not dealing with cash, it's going to be no entry. And we're going to have depreciation expense and then accumulated depreciation like we had on some of the earlier problems for this chapter. Again, you can abbreviate. Make sure we can, there we go. Okay, and that is how you do this problem. If you have any questions on it, let me know.